Welcome back to Java. It's October 1st, 2025, and it is also Wednesday, which is Discord Day. So this evening, after the markets close, 5 o'clock p.m., this is Eastern Time, we will have a conversation there, and I'll show you how to get in there. If you haven't been in there yet, few of you have come in recently. Hopefully, you can enjoy some of the chat that goes on there in the meantime. Feel free to join us there anytime, but we will have like live discussion there this evening if you'd like to join us. Now, first, I'd like to thank those of you that are supporting this. And Reyes, thanks all of you. I really, really appreciate you keeping this going. Now, of course, big story, you can't miss this one. They shot the United States government as of midnight last night when they didn't come to an agreement. So we are looking at jobs forward and a lot of other things that are going on in the background that they're actually not putting out forward in what you would say the mainstream media news, so to speak. So let's get started, as always, with what's going on in the markets first. So Fear Greed Meter, still neutral, same number as yesterday. Now, I post this every morning because the markets are driven by emotion. Even technical charting, when we have these arguments or would say discussions on which one is more important, I think it's both. When you do technical analysis, it's simply to find where that point is where people will buy or sell, and it's driven by either the fear of missing out on more gains or the fear of losing it in the first place. So this is why we always watch. This is the first factor, which is a little bit odd in a financial. Now, maybe artificial intelligence will be taking this down in the future once trading goes to the background a little bit more. However, right now, still showing a bit neutral with this. Now we're watching the 10-year yield and the relative strength of the dollar kind of tell us background on that direction. So these have not really moved significantly since yesterday. We're really watching the 10-year yield and the short term, also the 2-year. These will spike if there is a liquidity issue. Those will be where you see it first. After you see it there, then you will see it move and hit the equities or the stock market. So keeping those in line. Now, an interesting thing is we've got a lot of capital or money flowing into risk on assets again yesterday and cryptocurrencies last night. So Bitcoin is up above 116,000 again already and showing more strength. So more money into the stock market. I think this is more of a correlation to inflation. We'll talk about that in a bit. We've got oil is still weak. Now that is causing a lot of problems. Gold has hit a new record all-time high, now above $3,900 per ounce. So this is really telling us more tales of not really the value in gold, but rather the value in gold priced in fiat currencies. We're also watching volatility index, which is increasing. So these are our main factors here that we're looking at. Futures look a bit weak. This is on the shutdown. However, we'll see how this plays forward with what happens with what they talk about and the sectors, whether this bantering in the political sphere, how it will affect it. So this is our daily drivers are the shutdown. ADP, so we're watching employment. We are going to get these numbers, so I believe they're going to be paying a little more attention to these because we may not get the reports on Friday. We also had top brass. What is this? This stands for the high end of the military on that new meeting that they had out there. Now, kind of a little bit more background here. This is more focused on internal issues, meaning within the United States itself. This is not about external wars, Iran, China, any of that. It is all about internal issues, which I believe going forward could be a very serious problem. We can talk about this tonight, not here. So we've got revaluation coming. I spoke about this yesterday with gold. However, this idea is beginning to spread even more. I'm actually beginning to hear it from other popular voices now. So we're definitely going to. I think this is going to be the most likely scenario, probability wise, placing it above 75%. This is going to be the way that they shift all of this monetary system into the crypto world, if you will. So we are going to CBDCs, and I'll talk about that more in a bit. So we've got more of a defensive market stance taking hold. We're watching shift in the sectors, and we're also watching you need to reallocate your what you're holding. Now, defensive market stance, if you're holding gold and silver, that is included in that. So we're watching also bonds because there's some very interesting scenarios going on with that. Now, with this is a global issue. Bank of England, they're talking about persistent inflation risks playing out. This is kind of a given, in my opinion. Inflation is going to continue. They are continuing to print. They're continuing these deficit spending. The entire argument about the government shutdown is overspending, so they will be continuing this. So we've got also different views on the same thing. So Bitcoin reviving gold correlation as it nears 117,000 again. So I disagree with this. I don't believe that this price increase is a revival of a correlation with gold. I believe it's more of a revival of a correlation with inflation. But both of these are in an asset class to where they are kind of revealing how much true inflation is. They can say it's just around 3% or lower than 3%, but these tell the truth. Gold near record high, 3,900 an ounce because of the shutdown. It's not really because of the shutdown, because it is part of fear, but this is inflation that is playing in. Fiat currency constantly printing, going to less value every day. Now, we've got this down here, Africans using stable coins to survive inflation. They have recently gone through hyperinflation in Zimbabwe. So they're no stranger to this inflation, superinflation issues that they've got. Now, want to speak about crude oil just for a moment. We are hearing from all of the oil magnates because this price of 62.21 per barrel is not enough to sustain or pay for, in short, the cost of putting that barrel out there. So as this is happening, this is compressing the profit margin. They're not making money from doing this. So they're looking at cost cutting. Most of this they're doing through cutting labor. So as they cut labor, increasing unemployment, and this is feeding into that cycle, which is, in short, leading us to spiral the drain, if you will. Now, for the calendar, we are getting the ADP employment this morning and then PMI ISM manufacturing. So we'll be looking at these numbers. Really, the big mover are the jobless claims, and then also, of course, reports for unemployment Friday, which it's not likely that they will be putting out now. So we have Fed Jefferson saying there's a lot of uncertainty around the economy. This uncertainty is especially high. So with all of the talk about rate cuts, this is kind of a dovish remark saying that forward they're going to have a policy of easing, which of course they have to in one form or another. So what's going on with the little bits of market? As I said before, fear of missing out is winning right now over the fear of loss. This is driving markets higher. And we've got a compelling move up. Well, what I mean by this is that a lot of the hedge funds, a lot of the 401ks are under directive. They must stay invested. They cannot go to more than a certain amount of any particular asset, including cash. So all of these funds must stay invested in something And at the moment, the United States stock market is still the most liquid and, if you will, just like the dollar, cleanest dirty shirt in the investing world. So they're staying in the market, and that's part of what is pushing this up. That being said, Asia is making massive gains over the past month or so with all of this going on. So we are watching more money flows. We had Taiwan Semiconductor. Washington was pushing for them to create 50% or more of their chips in the United States. They've said they're not doing that because it's a security issue for them. I tend to agree. Now, we've got the large deal with Big Pharma. So GlaxoSmithKline, Pfizer, betting big on the United States. They're making their deals now, and we're watching their stocks rise. We had the Federal Trade Commission also has a new lawsuit against Zillow. It's similar to a monopoly that they're going through for purchasing listings. So at any rate, we're going to see these be movers this morning. A couple of other things. We are moving to the stable coins, which are, if you've been here, CBDCs. So all of this shift forward, the monetary system is going to reevaluate and then reconstruct itself under these stable coins once they've got this in place. So it's not going to be about having a choice. They're going to force this in. We've got Visa, MasterCard, credit cards, direct testing stablecoins as cash equivalent for instant transfers. They've been doing this for a while and they're on the system. As I said yesterday, they're incorporating with SWIFT. Now I've got USDC as one of the larger stablecoins. They are partnering with Deutsche Börse for Europe, their stablecoin adoption. So this is global. Definitely Western world, but it is global, reaching even farther. So we've got the SEC weighing plans here to allow blockchain-based stock trading with this crypto push. So there is a token that was made specifically for this called Synthetics. Not financial advice. It could stand to gain from this. It's been around for some time, but we are watching this shift happen real time before our eyes. And yesterday I was talking about how it's very difficult to find a financial advisor. Well, artificial intelligence, this could be your new financial advisor. The models have now proven that they can pass the CFA exam to the level 3. So, certified financial advisors. Now, what happens if all of the AI models are looking to gain invest on investments and the whole stock market is on a buyer seller agreeing in the marketplace, and that arbitration is where the opportunity is? So what if they're all AI trading against one another? Think about the implications for that. So with that, I hope to see you all a little bit later this evening. This is the link to get into the Discord. Then you're gonna go to the welcome, make sure you click on the heart there. And then once it's 5 o'clock p.m., click on the conference area so that you can join us. You can check it out now if you'd like to. And then mute yourself. If you're not talking, feel free, join in. And these are the settings that you can kind of adjust those, if you will. So with all of this, if you need help, pipe up, post in there, post in comments, and we'll help you out. So I'm looking forward to speaking with you all later. And until then, my friends, resist.